There are like almost more than 4,000, 4,500 stock which are listed in the market. There will be around 1,700, 800 stocks which will have a market cap of more than 100 odd crores. So how do we identify those right stocks to create a portfolio? So at Ambit, what we do is basically we have our own internal proprietary framework, which is good and clean, and the fund is based upon that particular framework, where we basically weed out all those companies who are not clean on accounting perspective. Coming to the good part of it, it is once we have done with the forensic accounting, what we analyze is the companies on the basis of their capital allocations ability, the ability to generate better returns, the ability to run business very efficiently. So basically, it's just an idea of how their investment into the assets or gross block or working capital is turning to profits, from profits to cash flows, and cash flows back divested into the business, which are the addressable listed companies through all these two framework. What we get is out of 70, 80 handful of stocks, which meets both the criteria of being a company with good reportings and as well as good capital asset allocators. Then we create a portfolio out of this 50, 60 stocks. The idea of creating portfolio is basically to identify those great businesses which are run by very efficient management, very high on corporate governance, and where we see that that particular company has inherent capabilities to perform much better in the coming years in the form of higher earning trajectory growth, in the form of scalability, and in the form of strong management. Because what we personally believe that any companies which are able to grow faster in the coming ensuing years will be the one who are able to see their stock performance also in line with tandem with their financial performance. So this is the way we create a portfolio, and the horizon of our fund basically is at least mid-term to long-term. We create a portfolio of say around not more than 17, 18 stocks. The idea is to have a concentrated portfolio, because if you find some winners in a portfolio, they should not be penalized by having diversified by too much of stocks in a portfolio. So the expectations from the fund is that most of the stocks will continue to report numbers that we have envisaged, and being earnings being slave of the stock price being slave of earnings, what we see is that we want to at least give 4 to 5% higher than return than what the relevant indices will perform in the next 3 to 5 years. And how we will achieve it basically is considering those kind of businesses in our portfolio where we see the earning growth is much higher, 20 to 25%, and which are available at the right valuations.